Welcome to Drill Down Earnings. We have the latest earnings results out from CrowdStrike. It is one of the 50 most important companies in technology. That's why we cover it here at Epistrophy Capital Research. I'm Cory Johnson, Chief Market Strategist. CrowdStrike is one of the biggest companies in all of cybersecurity. Q1 earnings better than Wall Street expected at $1.11 billion, 66 cents in earnings per share were expected. Well, they gave us a lot better than that. They gave us better results in the quarter, both in terms of revenues and in terms of earnings per share. But maybe the most impressive thing to me was the record cash flow and financial strength from this company. Free cash flow in $279 million in the quarter. 25% of revenues went straight to free cash flow. Cash on hand up to $4.6 billion. So these guys are locked and loaded and ready to go, whether it's for any kind of problem or any kind of acquisition. These guys are ready, which is the history of this business. That's how we see it. And they're using that money. They're going to take $1 billion and buy back stock. CrowdStrike announcing a new $1 billion stock repurchase program, reflecting management's confidence, I guess, in their long-term growth and the value of their stock. They think they're going to get their average recurring revenues, their ARR, up to $10 billion. They think they're on track for that. Nonetheless, revenue growth cooling off down to 22%. 22% is most companies this side would kill for, but this company is growing at 50% just 2 years ago. But law of large numbers strikes. Operating margins fading, but as I mentioned, they're generating free cash flow. Small operating margins just lets them pay really low taxes here, but they're generating a lot of cash. One of the chief reasons is their Falcon Flex product with $3.2 billion in total account deal value. That's 6 times larger than it was a year ago and up 31% sequentially. Now they've got 820 customers on that model. And across their business, their SEIM business, their cloud business, their identity business, all doing really well in the quarter. And their Charlotte AI product, in several large deals, including an 8-figure expansion with a healthcare provider being used for triage and autonomous SOC. So imagine your security operations, the guys that sit in front of monitors and look for problems coming into a company. These guys are now monitoring the stuff automatically using AI triaging a lot of stuff so they don't have to deal with it. So they can save their firepower and individual attention for bigger problems, replacing costly manual processes. We see the similar products out of Palo Alto Networks. It's all the rage in this business. Now the subscription growth also slowing down, but again at 23%, that's pretty nice for a business this big. How did the stock react? Well, the stock sold off pretty good, down 6% in after-hours trading, but look, it's up 58% in the last year, so maybe just some profit taking there. And one of the most important numbers these guys gave us was their average recurring revenues. It's now $4.44 billion, up 22% year over year. They had $194 million in net new ARR, beating what they say were their internal expectations. We'll never know. And they say it's showing a lot of proof of accelerating demand and execution. Here's CEO, friend of the show, George Kurtz.
I think we did a great job on execution, and with the right platform and solving the problems that we're solving, we powered through it. Like, you look at the results with net new ARR, it was fantastic. Again, customers want to buy more and more from us. Next Gen SIEM has been a total home run. So, I can only focus on what we can control. And I think the team did a fantastic job in an environment that had a lot of noise to power through it and deliver the results that we delivered.
Yeah, they did deliver. What's the big takeaway? What's the one number that tells us a whole lot? What's the one thing to remember about CrowdStrike earnings? Well, we've got that. So CrowdStrike just reporting first quarter earnings. Your essential summary shows you that our revenues were fantastic, record cash flows from this company, record quarterly revenues, and yet growth of only 22%. That's the lowest it's been for this company, but it's still a fantastic quarter for these guys. ARR is up above $4.4 billion. But I think that subscription slump, if you will, 23% shows you kind of where this business is. It's big, it's growing, just not as fast as it used to. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.